All right, good morning, everyone. It is 8:46 in the morning of June 16th, 2022, and this is my pre-market strategy session. So, the title of this video is, let's see, Gold, Oil, the Qs, and SPY. So, basically, we'll kind of go over them in that order. So, there are central banks that are starting to ease. The European Central Bank, as well as the Bank of Japan, are starting to ease their monetary policy in order to fight inflation, or I'm sorry, in order to stave off a recession. And so, really, essentially, what they're doing is they're sacrificing their currencies, and they're going to inflate. And that is really bullish for gold. So the bottom end of the risk range on gold is 1806, and the top end of the range today is 1879. And we're about halfway, a little bit less than halfway there right now at the price here in the pre-market. But I think that averaging into a position here, that's what I'm going to do. I'm going to continue averaging into a position, here in the lower half of this risk range, and look for it to hit the top end of the risk range, maybe even go higher. We'll see. We'll see how it goes. Oil is starting to show its first signs of weakness, and even that is kind of hard to say. The remedy for $100 oil is $100 oil, right? So here it is. It made this run. It made about a 25% run from the 11th of May here until the 8th of June in 1 month. Now its all-time closing high, or I shouldn't say all-time, its most recent closing high is up here at $122 a barrel even, and it recently made a run for that and couldn't make it. Right now, this could be a pullback. I mean, technically speaking, certainly technically, oil is still bullish. And fundamentally, it's bullish as well. There is still an extremely significant shortage in oil production versus global demand. I think global demand is outpacing production by something like 500,000 barrels a day, which is a lot. And so, yeah, well, anyway, this is the first pullback after this 25% run right here. I don't know. Will it pull back 25% or 10% back from its recent high here and then continue? I really don't know. I'm going to wait for it and see what it does. If it starts making a green day here and then bottoming, kind of leveling out here, then it's probably going to build for another move higher. This is just a sort of a short correction time frame here. I mean, this could last a little bit longer. This little leg right here. I mean, it could go on for another couple of weeks. But then once it starts showing signs of bottoming, which actually I wouldn't be surprised for it to start bottoming right here and then start making its next leg higher. Eventually, oil is going to come down really far, but the fundamentals have to be there. All right, and then pre-market here. So yesterday, the Federal Open Market Committee, Jay Powell got up and gave his notes on the Federal Open Market Committee meeting, and it's really interesting. He basically said that he's not trying to induce a recession, but he really needs inflation to get down to 2%. Well, at this point in time, there's no way to really get inflation down without destroying demand. There has to be demand destruction. In order for there to be demand destruction, you basically, you got to basically induce a recession. So yesterday at the Federal Open Market Committee meeting minutes, he said, we're not trying to induce a recession. We're just trying to get inflation back down, which is really important. I think it's more important that he gets inflation. So the market, the way the market moves, this affects, I think, the top 10% earners in the country own more than 90% of the ownership of stocks and so forth on the market. And so the number of people that this affects is certainly much less than the number of people inflation affects. So, he's Jay Powell, God bless him. He's going to get that inflation down, and it's going to continue to put pressure, price pressure on the markets. And so here we are this morning. If the SPY opened up right now, it would open up 1.95% down from yesterday's close. And if the Qs opened up right now, it would open up 2.17% down from yesterday's close. So there was this rally yesterday after the Federal Open Market Committee meeting minutes were released, which is a total head fake. Just totally ran the market up after the minutes were released. Let's look at the 10-minute here real quick. So 2:30 is when Powell went on to speak. So here at this candle right here, Powell started speaking right here at 2:30, and you can see there's a little bit of position jostling beforehand, about a half an hour beforehand. That's normal. And then the market made a big run up, after the Fed meeting minutes. And so on this day, Powell did a good job of jawboning the market. But after people had time to digest the information that he released and digest his words, they're like, "Oh, this is going to be really bad for market prices." So, yeah, looks like the downward move continues starting today. Okay, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.